Hello and welcome for this week's episode of Conservative ETF Investor for the stock market update for the week of July 30th, 2017. And here's the homepage of Conservative ETF Investor. And once this video is completed, I'll upload it here so you can click on the link right here. Scrolling down on our homepage, you can see our current ETF recommendations. The most important thing here is that we are currently on a hold posture for our 7 ETFs over our 5 asset classes that we follow. And that is the important piece of information that I want to relay right here. This is how well the portfolio has done since our buy recommendations. It's up 16.28%, not including dividends. In order for you to get the dividends, you need to come down here and get the total of all dividends so far, which is 1.8%. And you would add that to the 16.28% since our buy recommendations. For calendar year 2017, the portfolio is up 8.92%. In contrast to that with the S&P 500, the S&P 500 is up 10.19% year to date. So we are trailing the S&P 500 by a little more than 1%. Okay, let's jump right to our charts. The first chart that I want to take you to is the S&P 500. We use the stock charting services called stockcharts.com, in which I am a member. And we, instead of looking at the indexes, we look at the corresponding ETFs, which represent the indexes. So this here is the symbol SPY, which is the S&P 500, traded on the New York Stock Exchange. The weekly gain was flat at 0.01%. Let me get rid of that inspect mode. You can see that we have been trading inside of this rising wedge pattern for quite some time. We use, this is a weekly charts. We use the 5-year time horizon candlestick charts. So each one of these, let's go over here to the thumbnail. Okay, see this large one here? That is 1 week's worth of information. Because it's a clear candlestick, we know that it opened right here, and it closed the week higher, which is right here. The red candlesticks represent that they opened here and closed here. The black candlestick represents that it closed higher than the previous week. It opened here, but it closed here, but because it is higher than last week's close, the color is changed from red to black. And the white candlestick represents that it closed higher than it opened. So that's the differentiation between the different color groups there. We use a couple of moving averages. We use the 17-week exponential moving average and the 34-week. So the 17 is the faster, the 34 is the slower. You can see that the faster is above the slower and the ETF is above both, bullish, bullish, bullish. We use 2 momentum indicators. The first one here on the top is the MACD at default settings. Here you can see that we're basically traveling flat. The next one underneath is the slow stochastics. Above 80 is bullish, so we're bullish there, and it's above the signal line, which is bullish. Bullish plus bullish. So there we have it on the S&P 500. Moving on to our next ETF. This one here is the symbol QQQ, which is the NASDAQ 100, and it had a negative week, losing 0.19% for the week. And let's see what we can see. Okay, so there we are in our thumbnail looking at that. You can see that we were trading in a rising wedge pattern. This The NASDAQ QQQ being very strong, broke up above the rising wedge pattern, came up, came down, tested the lows, and then bounced off of it and came up, and now it's just a little bit higher than its highs there. So it's pretty strong. You can see here where the MACD came down, bottomed, and rises up towards the signal line. Now numerically, it is 4.64. The signal line is 4.68. Technically, it is below its signal line. So depending upon what happens with this ETF, will determine how that reacts. The slow stochastics bottomed and is above its signal line, and it's above 80, bullish and bullish on the signal line. Let's move on to the next one in our list. That is IWM. IWM symbol is the Russell 2000 small cap. So here's for your diversification. It had a negative week, losing 0.41% for the week. Now, we were trading in a rising trend channel, and now we are hovering on the lower support line, but drifting upward simultaneously. You can see here just drifting upward, but hugging that support line, trying to figure out which way this is going to go. The slow stochastic has softened up and is running flat, and excuse me, that's the MACD is running flat. The slow stochastic has topped, and it is at 87.63, so it's above its signal line just barely. So we'll see how what happens with that signal line there. And that is where we are at for IWM. Next one, VEU. VEU is the Vanguard all world excluding the United States, traded on the New York Stock Exchange, had a positive week, 0.33%. Here we were in a rising wedge pattern, broke up above it, similar to the NASDAQ 100, and then came down, tested it, and bounced up above it, and is making all-time new highs there. You can see that over here in the thumbnail. Nice progress there last 3 weeks. That 3 weeks ago is when you had that big upward move. And since then, it's just been drifting upward. The MACD bottomed, is rising again above its signal line. Slow stochastics above 80, above its signal line. Bullish, bullish. Oops, sorry about that. Sorry about that. Trying to get this cleaned up a little bit. Okay, let's move on to our next one. Hold on. Okay, here is our next ETF to look at. This is bonds. The symbol is TLT. These are 20-year Treasury bonds traded on the NASDAQ. Had a negative week, minus 1.43% for the week. You can see that we've got a lot going on in this chart pattern, and let me break this down for you. So here is the support line. We had a double bottom, bounced off of that, and then went up. As soon as we went up above this line, there was a declining tops trend line that we broke up above. Then we traded inside of this declining wedge pattern here, but then bullish as the TLT was on this week right there, it broke up above it and then went up, getting close to this resistance line going back to 2015, but didn't quite reach it before backing down. Had 2 solid negative weeks. You can see it here in the thumbnail really well. This is week 1 and week 2, very negative weeks, but found support. You can see on that week after that, it found its support there and then bounced up. But then it looked strong, but now it's come back down. Let's look at our momentum indicators to see what they're telling us. Okay, on the MACD, the MACD has topped and is traveling back towards its signal line. We are right at 0, so this could go in any direction. The slow stochastics has found a bottom and is above its signal line. Those are bullish indications. So the way it's postured right now, I would get the interpretation that we are at least going to get back up to this level of 125 plus and at least come back and retest this high here of approximately 127.50 before it decides to do anything else. That's my interpretation of this chart pattern. Next chart pattern, VNQ. This is our real estate portion of the portfolio. It's our real estate investment trust, paying a nice healthy dividend of 4.38% annually for doing nothing more than holding this ETF. You see that we've been trading in this trend channel for quite some time, and we are currently right at the upper end of this trend channel. The question is will it break up or break down from this level right here? And let's look at our momentum indicators to see if they can help us. Now, on the MACD, we were traveling flat, bouncing up and down for quite some time, but you see here where we came down and found support and bounced above the signal line. That's a bullish activity right there. So that poises well for the bullishness of VNQ. Slow stochastics has found support and is rising. Now, a couple other things that I want to note here. Do you notice how on the chart pattern, how we have a low and this is a higher low? So we've made a higher low. All we have to do is make a higher high in order to confirm the price trend on this. The slow stochastics has made a lower high here, but still hasn't not made it above this portion 80 right here over the last couple of bounces. If we can get this slow stochastics to get above 80, which would happen if this were to close above this declining tops trend line, then I think that we would be poised to come up and then test this line right here, which is, I don't know, somewhere, well, here, I'll tell you exactly what it is. Let's see, we've got a high here of 88.88. So that's right about there, exactly right there on our chart. So anyways, that would be the next level. Oh, and just for you to see how much gain that would be, from our current position to here is approximately 6%. So a nice healthy gain if we can get above this resistance line. All right, so that's what we're waiting for on that particular one. All right, let's move on to the next one. Let's get rid of that inspect mode. Okay, our last ETF for this evening is GLD. GLD, which is gold, traded on the New York Stock Exchange, symbol GLD, had a positive week, gaining 1.2%. You see that we have been in this declining tops resistance line, hanging below that for many years now. And this has been a support line going back to 2013. Well, actually, we did break down below that during the years 2014, 2015, and we were below it in 2016 and 17. But I'm thinking that that is support now because it's since this level here in early of 2017, it seems to have found the support line right about there. So that's why I've drawn it in the way that I have it. And you can see over the last few weeks, we did come down. Let me put that right over here in the thumbnail. See these 2 weeks right here where they bottomed right there? Well, that is exactly right there on the chart where they did find support right there. What a great buying opportunity. Buy it and then come up right there. But now we are right smack dab against this declining tops resistance line. Technically, I believe we may have closed above it, but it's so close that I don't want to say that we've closed above it yet. And this would only be week one. But if we could get 1 or 2 more weeks of conviction up here, that would poise well for it to come up and at least come up to this 130 level. We're currently at 120.69. And then if we could get beyond the 130, then we could come up to the 135 and see if we can, continue on. On the MACD, you can see that we have bottomed and are coming up towards this signal line. At the rate we're going, we're going to cross up above it. The slow stochastics has found a bottom at 20, bounced and is above its signal line and getting ready to break above 50. But it's all going to depend on how it reacts right here, because we could break down further. Now on the slow stochastics, let me go to inspect mode for a minute. Let's just see if we have any confirming indicators here. Okay, on the slow stochastics, you'll notice that we were here, and then we closed here. It's not really giving us good information. I can't really base anything off of that, really. That's too tough to call. I think we need to wait and see which direction this is going to go in before deciding. But you can see our buy recommendation is back here at 109.61, so we're sitting on the plus side of this trade, so we can sit tight. Now we have two more charts to look at this evening. The first one is the VIX. Now what the VIX is a volatility indicator, and it's a inverse indicator, meaning that when this indicator goes up, the S&P 500 goes down. The top momentum indicator of the VIX is the the MACD at default settings has bottomed and is, oh, by the way, the chart pattern has changed. We're no longer on 5-year charts. Now we use daily charts with a 1-year time horizon. Each one of these candlesticks is one trading day. Okay, now let's see what's happening here. On the MACD, we have bottomed, and let's see, we are at negative 0.25, whereas the signal line is negative 0.27. So we are technically above the signal line, which is bearish for the S&P 500. Okay, and considering where this is at, it looks like this is going to continue on higher. One other thing that I just picked up here, let me go to an annotate mode to show you what it is, and I just believe I saw, I didn't see this earlier. All right, let's get rid of this here. Let's do a trend line, and I want to take your attention from here to right there. Then at the same point, moving up to there, to right, well, let's just say right there on a closing basis or opening basis, whatever. The point is that if you take this trend line, which is traveling down, and take this trend line, which is traveling up, you call that a divergence. And in this particular case, let me save that. In this particular case, that is a negative divergence, because remember, the VIX is an inverse indicator, so that when the MACD is saying that this is going to go higher, and it's just started to go higher now. That's why it's bottomed and crossed above its signal line. But this says that it's going to continue to go higher from this negative territory into this positive territory is my best inclination, similar to like what it did here, and it comes up like that. Well, when it comes up like that, you can see right here, I've got a chart of the S&P 500 symbol SPY here at the bottom, and you can see when this jumped up, the S&P 500 lost ground. Okay, it looks like we are right in the beginning phases of that right now. So it looks like the S&P 500 has reached a top and is going to correct down some. How much? I don't know the answer to that, but it looks like it's going to correct some. Okay, that's my interpretation of this VIX. The next indicator I want to take you to, the last chart for today, is the VXN, which is very similar to the VIX, except it is watching the NASDAQ 100. Okay, now here you can see that the MACD has clearly bottomed. Oh, here we have a thumbnail. The MACD has clearly bottomed and is crossed above its signal line. You can see that technically right here. We're at 0.15. The signal line is negative 0.16. So we are technically above the signal line. Also, you can see that the price has topped on the QQQ and is softening and coming down. Okay, so just so that you can see that on the chart QQQ, here is the QQQ chart. You can see the symbol right there. And actually, let's take you to a daily. Let's just look at that on a daily. Now you can see that on the daily where we're beginning to roll over. Right now we're trading right here. We're in the thumbnail. We closed at 143.84. You can see it right here, 143.84, which is exactly right here. But you can see that this has, it's topping and coming over. And it looks like this is going to continue down at least to this lower support line here, which is at the 139. At that point in time, we'll have to see exactly what it does. On the daily charts, you can see we've topped, getting towards the signal line. Slow stochastics topped, coming towards the signal line. This looks like we are definitely going to see some softening in symbol QQQ. So the market is looking soft this week. Although as conservative investors, we are still on a hold posture because we haven't broken down any of our support lines. I'll give you an example of what I'm talking about. Let's look at the S&P 500 on a weekly chart. And for us to go to a sell signal, we really need to break down below this level here and close below a 240 at least before we start getting into what we would say are sell signals. So we want to see some breakdowns below this area here between 230 and 240. So we're willing to give back some of our $210.98 purchase price because we don't expect to sell at the bottom, to buy at the bottom and sell at the top. We expect to try to grab the 80% in between is what we're going after, trying to do it conservatively with a diversified portfolio. So that wraps up this week's episode of Conservative ETF Investor. I hope you have enjoyed it. I am your host. My name is Ken. I thank you for watching.